Hi friends, Simit here from InformedTrades.com. Today is June 16th, 2014. Time for our daily Forex chart review. Basically, in these sessions each day, I share the trades I'm placing, adjustments to existing positions that I'm putting on in the markets, all as a part of helping traders learn. The method of trading that I employ is price action swing trading to the Forex market, looking at the daily time frame. If a lot of the terminology I'm using is unfamiliar to you, if you're trading other markets, if you're completely new to trading or just looking at different time frames, check out InformedTrades.com. We have a huge archive of learning material that can bring you up to speed to my approach. Or if you're completely starting out, have a whole bunch of structured lessons for beginners, structured lessons on many topics. Check it out. Register as a member. Share your knowledge. If you have knowledge to share, ask questions. Set up a practice account. We can all learn and trade together. Let's get started with a look at the charts. As is customary, I like to start with a look at gold, because gold is something that I have a fair amount of my net worth in for the long term. Bullish on gold. I expect that on a multi-year timeline, we will see new all-time highs higher than what we saw in September of 2011. In fact, I think we will go considerably higher. Okay, so from that perspective, I'm happy to buy at between 1180 and 1280, possibly even a little higher. At least at this point, I think I've been accumulating gold for years now, so I'm about at my tolerance, the most I want. But from a technical perspective, I think we're at a key point now. I said I wrote a blog post over the weekend saying this week would be a key week for gold. We have an FOMC announcement coming out of the U.S. We're also from a technical perspective, we're at this major level here. We're at 1280, which is a huge level. Price was once we cleared 1280, we quickly dropped to 1240. We did form a base here. Now we're back up here. This level, I think, could attract a lot of bears, which could send price all the way back down, perhaps all the way down to 1180. We'll see. We do have the market did gap up to start this weekend, so this is I would consider this a novice gap. I would think that is a little concerning for the bears, or excuse me, for the bulls. For the bulls to really gain momentum, we do have to clear the 50 simple moving average, which is at 1286. So we're at 1281 now. If we can close above it, if we can rally $5-6 more and close above the 50 simple moving average, that will get a lot of people to go bullish in my expectation. Then the next barrier above that is the 200 exponential. If we can get past that, that it is also interesting. Also, or will be very positive for the bulls. Something that I mentioned earlier was an ABCD pattern. Let me quickly just draw that here. It's actually this one. So A, B, C. Now, if we did that, D would be 1.56. It'd be like right around here, 1450. And we expected D to be reached by around this time, right? So the basic idea is here, the distance from A to B equals the distance from C to D. That gives us in approximately the same amount of time it took from A to get to B. So if we did that, we would expect 1450 right about now. But of course, we are well below that. So this pattern did not become actualized. Once we close this candle here on May 23rd, I think that pretty much invalidated our chances of getting to here. But that's gold. I think we're at a major level now. If you're a short-term trader, I might take a position off at this time. Let's see how this could be an opportunity for bears to come in as well. So if you got long here, now might be a good time to take some off. If you're a bear looking to enter, the price action here will be really revealing. Is the basic point. So that's gold. Bitcoin. Another position I have on, it was kind of when price fell right to the 50 simple moving average and the 200 exponential moving average right here. 522 is a really interesting level. Price has rallied from there. I don't know if we'll retest it again, but if we do end up forming a range here, that could be an interesting level to buy. I'm speaking mainly from a technical perspective, not about the merits or errors or flaws in Bitcoin, just looking at this from a technical perspective. This pattern here, this long range that formed, once we broke out of that was where I really got interested in buying right around here, right around 520. So far, so good on that. I have a pretty inconsequential investment in Bitcoin. So even if it goes to zero, I won't care really too much. Of course, there's an upside that it goes considerably higher, so I view it sort of as like an educated lottery ticket, almost the way I view many penny stocks. Um, okay, so that's Bitcoin. Now, today I did not do much in my Forex trading. One thing I did do is I closed out my dollar Canada trade, a short dollar Canada trade. We had a very bullish candle today, and I closed that out. Now, if we look at the 4-hour chart here, okay, in hindsight, it may have been a mistake to close it out, and I may have closed it out at the most inopportune time right here. But I did close it out, and part of the reason is that, one, we have a really big bullish candle. Even on the 4-hour chart, we do have this really big bullish candle here, which I think is not a particularly positive sign if you're bearish. We are forming a trading range, and this did occur right at a a support level, a support level established here and here, and some minor. It was the break-even point. I just took the trade off because I was not liking the way this was going, and more importantly, Canadian dollar in general seems like it's weakening again. So I saw this on every pair. One other trade that I had on, and I closed both of them out, was Pound Canada. So, and here we go. So, I had gone short at 83.67. I closed this out for a small loss up here, but I closed both of them out. So I closed my short dollar Canada and my short pound Canada, and that got me a very small profit, almost like, I think it was probably like 0.15%. So basically nothing. Closed that out. But that was more so of a defensive move. I saw the Canadian dollar weakening, and I just didn't think the technicals were really supporting the original thesis behind the trade. So I closed it out for a small profit, although the more important thing is that I eliminated the loss and traded defensively. Something that I think in my own trading I want to work on and improve. Not still allow the good opportunities to grow to their full potential, but when you see something that's not right, you close it out. That's sort of my basic idea, the basic outlook. And that's really about it for today's trades. Not much going on. I just closed out my Canadian dollar position, so I'm completely flat now. I don't have any trades in the Forex market. Of course, I'll be on the lookout for opportunities to see what the market offers for the remainder of the week. That's about it. Any questions you have, anything you want to add, join us at InformedTrades.com. Best of luck in your trading, and we will see you tomorrow. Take care.